Hello friends, Philip Robison here of Philip Robison Property, and welcome to Victoria's Yarra Valley on this Australia Day weekend. And first off, I can tell you that the number of loans to owner-occupiers rose by 10% in November, bringing the monthly total to $13.4 billion. And according to CommSec chief economist, well-renowned Craig James, the housing market, well, he believes it's on its way back. However, the latest quarterly survey by the ANZ/Property Council of Australia suggests that a pickup in construction, well, it's yet to really take hold. Buyers, home buyers that is, they are really only purchasing established dwellings. And in fact, to support this, owner-occupied construction loans for new dwellings fell by 8.4%. Now, buying intentions have hit a record high, with consumers planning to spend money on things like housing, cars, entertainment and travel, according to the latest survey of the Commonwealth Bank Household Spending Intentions. Now, according to CBA Chief Economist Michael Blythe, the home buying intention series lifted again and is now at a record high. He suggested there are some early signs of a wealth effect from the housing market, supporting spending on cars, but albeit from a very low level, as well as on travel and entertainment. Blythe says the HSI index means, with the pickup in dwelling values in the second half of last year, 2019, that it should continue into the first half of 2020, and that the residential construction downturn, well, he believes that it should be now about bottoming out. Now, I can report that mortgage brokers have been seriously busy. Busy times ahead as first home buyers are taking advantage of the federal government's first home loan deposit scheme. We're certainly seeing a trend in Melbourne. Most noticeable, Foster Ramsey Finance Principal Mortgage Broker Chris Foster Ramsey saying since November, his appointments have been up 200% year on year to date. Now, he suggested in the price point of $300,000 to $400,000 in those outer, or what we would call fringe suburbs, competition for housing has been excessive. Melbourne-based 40/40 Finance Director Will Uncles saying that business is booming, with inquiries significantly stronger than 6 months ago. And I think most brokers would report that trend too. Now, in terms of the residential rental market, I can tell you that vacancy rates rose slightly in December, but the asking rents also grew in most capitals. Now, that augurs well for a positive outlook for landlords in 2020. And SQM Research, well, they've suggested that we've probably reached the peak in national rental vacancy rates, with ongoing strong population growth absorbing any of that surplus rental stock throughout this year. And again, Hobart leads the way. It's the tightest rental market of the capital cities, with a vacancy rate at just 0.6%. And I can finally tell you that after a 2-year hiatus, home sales for new houses, that is, have turned the corner and begun to rise again, according to the Housing Industry of Australia. The latest HIA new home sales report shows that sales of private detached houses rose by 2.8% across Australia in the 3 months to November 2019. Once again, the recent easing of credit rules, interest rate cuts, certainly marked the beginning of the rise. Of course, further boosted by the income tax cuts and the first home buyers deposit scheme. So yet, despite though these positives, new home sales were still down by 5.7% compared to a year ago. And there you have my wrap for the week, friends. Have an amazing Australia Day long weekend. Be well, celebrate, be happy and healthy. Till next week, Philip Robison saying bye for now.